All right, let's get into Fishers. I'm going to take this one on. I'll tell you, the last couple of years, it's been a tumultuous type market. It's been up, it's been down. The ordinance that's coming in here, and I don't want to get too much into the ordinance here. If you want to check into that, check out the previous segment where we did dive into that a little bit more. So let's get into the numbers here. All right, number of active homes. You got 77 active homes in the area, which is down 5%. Average rental price at $2,300, which is continuing to tick up right along with the Indianapolis market. Actually, a little bit more. You're up 4.75%. Your average days on market at 40, which is super healthy in my opinion, especially for Fishers. My goodness, if you've been tuning into us for any length of time, that son of a gun has been up to like 50, sometime maybe even. I don't know. I have to look back. I don't want to throw any fictitious numbers. So, but yeah, it's been crazy high. Your average price per square foot is down just slightly at just over $1. Now getting into your apartments and condo figures there at the bottom. So your apartments, 43 active apartments at $2,001 with average price per square foot at $1.47, and only 10 condos or townhomes available in the area at $2,250 with 42 average days on the market at $2.38 for your average price per square foot. Now, those sweet little graphs there at the bottom, your single family homes, you'll see that price, which is up almost $100 year over year compared to the previous year. And that is an awesome graph that almost resembles our Indianapolis market quite closely. I mean, that is consistent. That is that little tick up there is heavily due to the seasonality. So if you've got a property you're thinking about putting on the market here, do it ASAP. Take advantage of the peak here, the peak season, and let's place a tenant here much quicker with your average days on market than you're going to see in other times of the year. Certainly ahead of August. And there's your other two graphs there. I don't want to get into those. I never like talking about those graphs too much, but those are always there for your consumption. You can digest those as necessary. Mike, anything you want to say about this? And I'd like to get into your personal experience if you wouldn't mind, just for a minute. I promise we'll keep it brief.
Yeah. Just two things. I mean, just positive month over month and year over year. Just, it seems like, gosh, how can it go any higher? Because it seems like it's like reached a saturation point, but it does. It just continues to go up. So I'm just encouraged. I mean, look at it. It's 5% year over year. I mean, that's really, really good. It's really encouraging. And then the only other thing that I have to just notice is it's really curious how close the average apartment rent is in Fishers to single family homes. I think in Indy, it was like $1,000 difference, and maybe not $1,000, but several $100 difference. And here it's only $300, so it's a lot closer. So the apartment play in Fishers certainly looks like it's geared towards a much more luxury apartment versus affordability.
It is because, in these suburban areas right now, what they're building is not your average apartment complexes that they used to really build. It's all about amenities. Yeah. These apartments, they're attracting these younger individuals because they are swimming in amenities, from pickleball to tennis to basketball to even soccer fields I've seen them build on the ground. So it's all about the amenities so that they can increase those rental prices. So that's what's driving those, I believe.
Yep, for sure.
All right. Let's talk about just here real quick. So I want to talk about your search. So you mentioned earlier in the Indianapolis market report that you were trying to stay within that investor point of view, or maybe you want to get over to the sales side first?
Yeah, let's do the sales side because it's more relevant to that.
Yeah, good call. All right, here we go. All right, let me rattle off some numbers and then we'll circle back to that. All right, so your average days on market here, so your sales side. And just remember that these numbers are a little bit skewed because these are what we call the investor point of view. So this is only going to capture data that fits between a home that is selling between $0 and $500,000. So that to us is that investor point of view. That's where an investor is going to be looking for a property with the best ROI and not above that. So those are the numbers that we capture here. So your average days on market within that point of view. So look at this. Oh my gosh, look at this. Year over year. It's up 100%. If you wouldn't mind, double check that figure for me to make sure that that's accurate, but it's up 100%. I don't know how that would be accurate because it's down month over month by 11%. So those numbers kind of scramble in my brain, but go ahead and check those out. And I'm going to filibuster here while you're checking that. Just flag me down if that looks.
Yeah, just keep going. It's going to take me a second to look that up, but.
Okay. All right, here we go. So your average price per square foot is at $187 per square foot, which is up year over year by 2 3/4. of a percent, and your average sales price at 367, which is up just 1%. I got to tell you, it's not climbing as much as I would have suspected here in the Fishers area. And again, as we kind of alluded to in the Indianapolis market reports, but it's hard for me not to mention as I come across these numbers, even in these individual, and I don't want to beat this dead horse, but these numbers are definitely indicating that there's going to be a slowdown a little bit. There's no market crash coming in the real estate market. Let me be very, very clear about that. But this is definitely going to shift. And we've heard from people in the comments already that they're a slowdown where they've had several people look at their home and they've had to reduce their price and they're still not getting any offers on it. So there's definitely, the market is definitely shifting more in tune with a buyer's market than a seller's market, as we have seen over the last really couple years. So stay tuned. We'll see if that continues on. Homes sold. We've got 98 homes sold within that investor point of view. So that is up year over year, almost 11.5%. And then your average sales price over time, which, man, did we see a tick down in March for your average sales price?
Yeah.
Man, I don't want to call it a correction, but you know.
Yeah, but it was right back up. It was right back up.
I'm kidding. All right, yeah. So it is flatlining there. We'll see what happens over the coming months. And then your number of homes sold. So this is where your meat of the market, where you are able to pick up properties. And what we really like to highlight with this graph is that really sweet spot, $250,000 to $300,000 for the Fishers market. There's 149 homes that sold within that price point, and those are very likely to create sweet investment opportunities. So even 300 to 350, where a majority of those homes were sold. I mean, so this is definitely still an investor's market that you can enter if you have the purse that's able to have that initial investment price point. So, Mike, back to you. Did we check that average days on market? Are we good on year over year?
I did. I mean, I haven't cross-checked it through MyBor, but if our spreadsheet can be believed, then yes, it is correct. What happened was last year, days on the market was crazy, like 20 days. The average days on the market was 20 days. And so that's why it's up 100%. And then last month was something like 45 or something like that. So that's why it's down month over month and then up so drastically year over year, because last year was a crazy year. And things were just flying off the shelf. And that goes to my point of counter arguing your doom and gloom is that we're not in doom and gloom. Last year was crazy. The last 5 years have been crazy. I think we're entering into like a more balanced, more normal market. 40 days on the market as an average is normal. That's good. Things are not falling from the sky. Everything here is positive. You know what I mean? Other than year over year days on the market, average price per square foot is up. Average selling price is up. Number of homes sold is up. So, I mean, there's not one negative number to report here. I understand the market.
I don't even want to talk to you anymore. We're done.
Maybe a little bit of a shift, but we're not seeing it here. I'm not seeing it from my personal point of view. So I don't know. I'm still sticking to my guns. It's going to be a balanced market. Not every home is going to sell in 3 days with 7 offers and go, $50,000 over asking price. So it's going to be more normal. That's what I think.
Yeah. Well, everything I've been reading is the market is becoming flooded with inventory at this point. Yep. I don't know if flooded's the right word, but it does have a lot more inventory than we've seen. And you very well could be right. Maybe that is a normal market, which is in the best interest for everybody. So only time will tell. So I'd like to get into, I know that you've been looking for a property here in the Fishers market. Anything you want to add before we dig into just a couple things there?
Yeah, just a couple of things. Just the only thing I want to add is that, yes, we are reading that inventory is flooding the market is probably not the right word. We have much more inventory than we have seen over the past couple of years. But everything you've been reading over the last couple of years is that inventory is so tight. And that's why everything is selling so much. So to see more inventory hit the market, it's one, refreshing. It's two, balancing the market out a little bit. So I guess it's returning to normalcy. I think normal was crazy for 3, 4, 5 years. However long it's been nutso for, that was normal, but now it's going back to what used to be normal. Does that make any sense?
You begin to lose sight. Yeah, you're exactly. You begin to lose sight of what normal looks like because Man, for the last couple years, I know that builders in even my area have been throwing up homes so fast. I mean, everything that was farmland around us is now neighborhoods. I mean, they were throwing them up so fast you could hardly keep track. But
Yep.
now, in some of those that started building maybe a year ago, and they have other areas that they continue to continue their building on, right? The next plot next to it, whatever,
Yeah.
where they have roads laid, they're not erecting those houses right now. So all of that new construction has slowed down. All of that new building has slowed down. And whether that's because they don't have the buyers picking up the properties that are already built, I can only assume that that's why. But to your earlier point, that's probably more of a healthy market. And all I've been seeing here for the last 12 to 24 months is them throwing them up left and right. Well, that's,
Yep.
that's kind of.
Let me just share something real quick. Let me just share the screen real quick with you. I've shared this before, but I think it's so important. This is.
Give me a second. I'll throw you up there.
Okay.
All right, there you go.
Okay. The only thing I want to talk about here. So we went over this a couple times. I've shown this a couple times. This is basically a market report that MyBor does. They do it for, this is all of MyBor. So basically central Indiana. So this is everything. It's not broken down like we break it down. But the important thing that I want to look at is this 1.7 here. That is number of months of inventory that's on the market. Okay. So that means if we stop putting houses on the market, how long until all at the rate that we're currently selling them, how long until all of the inventory is gone? So it's 1.7 months. So by definition, that's still a seller's market. Now, again, we are looking backwards. We're looking backwards, and we're reading more and more homes are going to hit the market. But that's a number to keep an eye on. Is what's this is called the absorption rate. What is the absorption rate? And until that gets at like 3, that's a balanced market. Somewhere between 2 and 4 is a balanced market. Under 2 is a seller's market. Over 4 is a buyer's market. So we're still in a seller's market. So I mean, yes, I think it is changing. I think at one point this was like 1. So we are seeing it creep up. But I don't know. I guess I just feel like countering your doom and gloom again.
No, we just stop it with the doom and gloom. All right. That sharing is now done. All right, let's move on. All right, so you did mention though that you've been looking for a property here in the Fishers area, and I just want to highlight a couple things because I think it's helpful for new investors that are wanting to enter the market. What did that search look like on the front end? So you talked to your lender, you secured whatever financing you were able to. Were you planning to finance have you found a property yet?
No, I've put 4 offers in and I've been beat out every single time.
Wow. Okay. All right. So you secured financing. Are you planning to finance all of it? Are you going to put 20% down, or are you trying to avoid the interest rates and pay for it?
No, I'm definitely going to finance it. I'm going to use because I'm self-employed, and so it is very time-consuming, difficult to get a conventional loan. So I'm going to do a DSCR loan, which we talked about on our podcast with Tevis from Supreme Lending, which if you're an investor and you haven't heard about those, do some research on DSCR loans. They're very easier to get in terms of paperwork. It's more about the asset than about you as an individual. Certainly, right. it is credit driven. You do have to have good credit in order to qualify for one of those loans, but it's more about the asset. They look at the asset and can the asset pay for itself. So the income documentation is severely shortened, limited. I can't think of the right word, but it's a lot easier.
Yeah, I think you captured it. Yeah, I think I got it.
Right. So definitely doing a loan.
Okay, and since we're talking about lending here for the moment, let me shout out Tevis one more time from Supreme Lending, who is absolutely incredible. So if you are in the market looking for a lender, I highly suggest you reach out to Tevis. Check back to our previous podcast where we did a full-length podcast with Tevis. Check that out, and you can find his contact information, or feel free to reach out to us. You can jump into the comments. We'll be happy to share it with you. He is absolutely incredible at what he does. Okay.
He is, and let me just give him just a little bit more plug, because I just closed on a loan with him.
Shut up!
Yeah, last month. So I can tell you just from personal experience that him and his team do an amazing job. We closed on time, actually. I think even a little bit early. Everything was just like he said. So I can give a personal recommendation for him and his team.
Nice. That's incredible. Okay, so you are going to finance it, and so. What are you doing then? So are you underbidding these homes? Are you going in so so that it will actually pay for itself, or how are you trying to balance those costs? Because if you're going, what interest rate are you looking at, and how are you going to cash flow this? Or are you expecting to cash flow? What's your thought process there?
This one we're looking to do a short-term rental. So that's how we're
Okay,
looking. That's how we're looking to cash
easier to
flow it.
cover.
Yeah, easier to cover your cash flow. A lot more work on the front end, but we do happen to be in the property management space, so that makes it a little bit easier for us in terms of management of it because it's what we do for a living. So anyway, so that's how we're gonna to manage the cash flows. We're gonna do a short-term rental because we're looking to add another one to our portfolio, and we've identified Fishers as a good market. And then kind of adding fuel to the fire is that rental cap. There's, if you haven't heard, they're putting a 10% rental cap on all rentals in Fishers per subdivision. Anyway, like Chris said, we talked about it in our previous.
Yeah, check it out.
Yeah, check it out. We don't need to go over it here, but just a heads up on that. So that's what's giving me a little bit of urgency to try to find one in the Fishers area.
Very cool. Very cool. And the price point that you're looking at, just kind of curious about that, and we'll move on here. So 250 to 300, is that kind of the price point you're looking at?
Yeah, like up to 350 is what we're looking at.
Okay.
And they're
Okay.
going fast.
All right.
The ones that we're looking at are going fast. We've submitted every single one. We have either been full price or over full price. And
Wow.
like I said, we've been beat out every time.
Any indication on how many offers were submitted? Has that information been shared with you?
Yeah. One was 6. The other one was just
Wow.
2. The other one I didn't get. It was just we had multiple offers. And same with the other one, we just had multiple offers. So I know 6, 2, and unknown.
Okay. And investors that were looking, or
I don't know.
no? Don't know.
They can only tell you so much.
Yeah, I know.
So I don't know.
Yeah. Okay. All right. Well, let's move on. So that's a little sneak peek at what's going on, and how Mike's personal search for an investment property in the Fishers area, and how it kind of works. Just a gloss over. All right, moving on. Here we go.